Very important that we don't try to constantly draw market-wide inferences from what happens with Silicon Valley-based startups. Let's not be goldfish. We've been here before. Around the time of the Facebook IPO in 2012, there were people saying the valuation was so big and the market cap requirement was so large that all other tech stocks had to be sold, and Facebook put a top into the tech rally. We're 8 years later. Facebook came public at a $40 billion valuation and went to $500 billion without a problem. So look, we did this in 2019 when Uber and Lyft came public. Oh, this is the top for tech. They're too big. There's too much frothiness. In February 2015, Judge, we were on a TV segment the week that Fortune put out the unicorn cover, which is now infamous. And on the cover, they said 80 Silicon Valley startups are now worth $1 billion or more. And it was shocking at the time. If that magazine cover came out today, people would say, no, I get it. That makes sense. Many of the companies listed have since gone public, and they're worth tens of billions of dollars. So if you had taken, let's just use February 2015 as an example. If you looked at that unicorn cover indicator and you said, that's it, that's the top of tech, too much froth. Well, the NASDAQ was 4,400 that week, and it went to 12,000. So you sat out 185% rally in the Qs by making that decision that you were going to take a handful of speculative, uber high valuation companies and use that as your justification to reposition your portfolio. So I'm not a fan of it. Doesn't really work. It makes for better TV than it does for portfolio management.
I don't know. I mean, you don't take a step back and say, you know, it's 100 times sales. This thing has an incredible first day, and you don't take a pause relative to where we are in the whole landscape and say, I don't think this is good.
We've seen a million examples of this, though. It's not even in the S&P 500. Investors don't own this in their 401k. It is not an important stock. It's a great stock to watch. It's a lot of fun.
I know, but we're not talking about bearing. You're missing my point. I think you're missing my point. This is not about the stock itself. This is not about the company itself.
I get it. It's about sentiment.
It's about the broader picture of where we are. Right? So let's address it. So now let's address it in those terms.
Okay, so now the stock is getting crowbarred, and does that change how investors necessarily feel about other stocks that they own?
Well, I don't know.
Think so.
NVIDIA. Okay, Kramer makes the point. Okay, Okta, Jenny, Okta goes from 230 to 185. This is Kramer pointing this out today on Twitter. I thought it was interesting, so I wanted to mention it too. In terms of where things may go from here with some of these stocks that have had incredible runs. Okta 230 to 185. We have this tweet that he had on NVIDIA as well and Zoom. And it underscores, if you will, I think, very well, Jenny, the landscape and what may be a pullback in some of these loved names, especially over the last few months.
So for what it's worth, I don't even know what Okta does. But I think that is indicative, too. What I've spent the last 2 days doing is toggling between the Goldman Communacopia Conference and the Deutsche Bank Tech Conference. And it's been really striking to be at those two. And this is, I think, exactly where you're going with this, Scott, which is at the Communacopia Conference, I'm listening to companies like Verizon and AT&T and CenturyLink, and they're trading at tiny valuations and minting cash flow. Guess what's up on my screen today? CenturyLink is up, Verizon is up, those kinds of companies are up. And then I'm toggling between some of those and companies like Spotify, who they don't, revenue growth, or rather earnings growth, is not even in the cards, and they're not worried about how much they make. And that matters. But I don't think it's just this Snowflake thing. I don't think it's just Okta's trading, but I do think that the party lasted a little too long and valuations expanded a little too much. Okay. And things got too crazy, and now we're just seeing a reconciliation of that, which is healthy. It's great.
Let me play off of that in terms of the party lasting too long. Pete, let's take a look at whether a DocuSign stayed at the party too long, had too many drinks. The stock's up 158% year to date. That list is long and distinguished with, Teladoc. It was at the party a long time. It's up 130%, as is Square. CrowdStrike, Josh Brown, a name that you bought not that long ago, is up 154. Peloton, almost 200%. Zoom, 485%. So, Pete, you tell me, when you look at those runs and you look at what Snowflake delivered yesterday, yes, it was a euphoric thing for the folks that are attached to that company, but it does raise some sort of signal somewhere of how far we've come in some of these names.
Yeah, there's no doubt about that, Scott. I would agree with you. And I'd also say this. I would say that the names that we're talking about here, CrowdStrike and go through Okta, all these various names that have absolutely flown to the upside, and it's been a magnificent thing to watch. But I think it's also, it gives you a good representation of why we should probably be putting ourselves more on the trading side of some of these rather than the ownership side of some of these names. And the reason I say that is you could absolutely get slammed on the ownership side. That side of it really is and can be very brutal. Not just a 3% move here and there, but off of those highs, 3%, 5%, 8%, of those moves to the downside are going to be very, very painful, I think, for people if that continues. So the great thing about the derivatives world is, and we've had these record numbers, we talk about it each and every day, but, 30 million basically contracts per day in 2020. This is an unbelievable number. But the reason for that is because of the fact that we have the opportunity. Volatility has come down to some extent, at least in the bigger picture of the VIX and so forth. But, I think these names can be traded. Okay. But I don't know that you want to be owning a lot of these names when they're up there at these lofty levels where they don't even have earnings in so many different cases. It's